breaking news. President Trump announced he is ending all trade negotiations with Canada.
U.S. President Donald Trump has announced tonight he is terminating trade talks with Canada, blaming an anti-tariff ad by Ontario for the reason.
The United States has just taken a step already being called the most radical foreign economic decision in decades. Donald Trump's administration has officially announced a complete halt to trade negotiations with Canada, citing what it called unacceptable anti-tariff measures by Ottawa. The decision came like a bolt from the blue, and even within Washington, many officials, according to the Wall Street Journal, learned about it only a few hours before the presidential order was published. Sources in the White House note that Trump had personally kept the issue under close control and made the decision after receiving the latest reports from the National Economic Security Council, which indicated that Canada's measures effectively nullified the benefits of American tariffs. According to CNN sources, Trump described Carney's actions as unacceptable and undermining the foundations of trade stability in North America. White House officials say the United States is prepared for a prolonged pause in trade relations with key sectors, from the automotive industry to energy, set to come under direct impact. Meanwhile, Canada is already exploring alternative routes. Bloomberg sources report that Ottawa's government is considering China as a potential strategic trade partner, capable of compensating for the loss of the American market. In the coming months, high-level meetings are planned between Canadian officials and representatives of China's Ministry of Commerce. The main goal of these talks is export diversification, expanding cooperation in technology, and infrastructure investment. Canadian economic analysts emphasize that this is a historic decision. For the first time since 1988, when NAFTA came into effect, Canada views China not merely as a trade partner, but as an alternative to the United States. In the White House, according to Reuters, officials are considering imposing new tariffs on Canadian imports if Ottawa continues to ease its anti-American measures. At the same time, the situation is creating tension on the diplomatic front. Politico sources report that Washington is holding an emergency meeting with the participation of the State Department, the Department of Commerce, and the National Security Council. The topic of discussion is the strategic response to Canada's economic pivot toward China and the potential risks to North American security. Canadian officials, for their part, are trying to show that the diversification under consideration is not directed against the United States, but preparations for new trade partnerships are proceeding intensively. Economic experts note that the consequences could extend far beyond the breakdown of bilateral trade relations. According to the Institute of International Finance, the potential trade volume between Canada and the United States exceeds $700 billion a year, with a significant portion of Canada's exports consisting of high-tech products, energy resources, and agricultural goods. If the United States and Canada fail to quickly reach new terms, both economies will suffer. American companies will face component shortages, while Canadian producers will lose their primary export market. Sources also point out that Trump's move coincides with escalating tensions in the Pacific. In recent weeks, Chinese warships have repeatedly approached American carrier groups, sometimes within just a few hundred meters, causing deep concern within the Pentagon. According to insiders in the U.S. Department of Defense, the White House views the situation in Canada through the lens of global trade and strategic competition with China. Many analysts emphasize that a break with Canada could push Ottawa to move closer to Beijing even more quickly, creating long-term geopolitical consequences. Canadian media are already raising questions about the country's new Asian strategy, noting that potential trade cooperation with China includes not only raw material supplies, but also joint projects in infrastructure, high technology, and green energy. According to the Globe and Mail, discussions are underway about investments from Chinese funds in Canadian railways, ports, and energy networks, which could, in the long run, help reduce dependence on the United States. The White House acknowledges that such developments could weaken U.S. influence in North America. Sources from the Associated Press claim that Trump is personally overseeing the development of a Plan B, which includes monitoring Chinese influence and the possible introduction of new economic sanctions against companies involved in cooperation with Canada. According to international trade experts, if Canada's diversification toward China continues, the United States risks losing its dominant position in key sectors, including the automotive industry and energy exports. Interestingly, unofficial talks are already taking place between Washington and Ottawa at the level of diplomatic advisors. According to a Financial Times source, both sides are looking for a way out of the crisis without escalating it into a full-scale conflict. But the likelihood that China will become Canada's new strategic partner is seen in the White House as a serious challenge. In the long term, the consequences of this step may extend far beyond economics. Political scientists note that such a break is pushing Canada to strengthen its ties with Asia, creating a new map of international trade where the United States loses its traditional priority market. At the same time, experts warn that if the situation continues to develop along the current trajectory, the consequences could be catastrophic. Production lines could stall, high-tech projects could be frozen, and strategic alliances in North America could be reshaped, leaving the United States facing a new generation of global competitors. Financial analysts note that such measures could alter the structure of global trade chains. According to Bloomberg experts, if Canada successfully implements diversification, it will create a new corridor of influence between North America and Asia. The country's economic model will become less vulnerable to U.S. actions, and its industrial and technology companies will be able to expand export flows to new regions. Against this backdrop, internal tensions in the United States are also rising. Sources from Politico report that major corporations dependent on Canadian supplies are already conducting emergency audits of their supply chains. Many companies are considering moving production or seeking alternative markets in Latin America and Southeast Asia. Experts warn that such shifts could cause short-term disruptions in the supply of components and an increase in the prices of certain goods. International experts predict that the rupture of US-Canada relations could trigger a domino effect across European and Asian markets. According to the Institute of International Finance, European companies operating through Canadian channels will be forced to restructure logistics, creating additional transit costs and longer delivery times. Analysts from the IMF warn that the consequences will affect not only the raw materials sector, but also high technology, industrial production, and financial services. Experts also point to long-term consequences for the U.S. economy. Losing the Canadian market could lead to higher component costs, reduced export volumes, and the need to rebuild strategic supply chains. At the same time, for Canada, this is a chance to accelerate technological modernization, expand ties with Asia, and reduce dependence on a single key partner. Sources in Canadian and American think tanks agree that the upcoming meetings between Ottawa and Beijing will be decisive. They will determine whether China becomes a real alternative for Canadian exports and how quickly the United States can adapt to the new conditions. Inside the White House and the Pentagon, there is an understanding that this decision is not just a trade pause, but the beginning of a process that could reshape the economic and political map of the entire continent for years to come.